Thank you very much, Jonas, for your great talk and your presentation. Please do stay in the line with me as your panel is coming up. I would
Okay.
also like to make a quick
So it's
announcement
Dino,
here to
Digitspin
the startups
Crypto.
out there. We will have
And
another Meet the
let me lower
Investor
this down a little bit.
session right
We're
after
live
the
at the
live talk with
ANON
Logan.
2020
And just to make
Summit
sure to check that
covering
out. We are
Electroneum
coming to the
as
third and last
a
session
media
today,
participant.
which is called Open
So the
Finance
fact of the
and
matter
Governance
is
of
that
Non-Financial
we're viewing the
Crisis.
live
And for
stage,
that, I would like to welcome our
and
panel moderator,
we've had a lot of fun
Roxana
so far.
Nazoy, who is the
We've given a
CSO at
tour of
Octagian.
the ANON
She will be
conference.
joined
We've
by Jonas,
talked to
Richard Ells,
Richard Ells and asked
Richard
him
Say,
questions.
and
And
Maximilian
here we
Meyerhoff,
go. Here's
Head of
live, and they're going
Finance
to
for
talk
the
about the
Digital
global
Asset
financial
Exchange.
crisis.
Roxana, on to you.
Thank you. Hi, everyone. Welcome to the Open Finance panel. We have some amazing people with us today. And, well, I kind of gave the guys some homework. So it's interesting. I have all the questions ready in my hat. But before we go there, I would like each of you to do a short round of introductions. And remember to say that one cool thing about yourselves. Who wants to go first? Let's go with Richard.
Oh, I knew you'd pick me. I didn't do my homework. I was the homework on the bus kid. That's the cool thing about myself. My name is Richard Ells, CEO and founder of a cryptocurrency called Electroneum, which is utterly focused on bringing wealth from the global north to the global south via a cryptocurrency remittance. And we've built all sorts of infrastructure and ecosystem to do that. That's pretty me in a nutshell.
Perfect. Who wants to go next?
Yeah, I'll just go ahead and hop in here. Since you guys just heard me talk, I won't spend a lot of time talking about StakerDAO because we just heard about that. The only fun fact I will say is that, like, right on the other side of my computer over here, I have several children in homeschool, and so if things go crazy, you'll know what happened.
Hey, when that happens.
Perfect.
Yeah, and I can go last. My name is Maximilian Mambach. I'm the head of banking and payments for the EMEA region at Kraken. And, my work focuses primarily on researching, sourcing, and onboarding the right fiat whales within the region. And yeah, I don't know. One cool thing about me is that I wrote and published a romance novel under synonyms, so maybe that's something of interest.
Maximilian, we need Kraken talking to ETN.
Perfect. Thank you so much.
Good.
For who doesn't know me, my name is Roxana, and I'm the CSO at Tachyon and do a lot of other stuff. And today I will try to take part in the question. I'm going to pick it up from here. We prepared many questions, so we have to see how we're going to fit in 1 hour. So we're going to do a round. Maybe we keep the same structure, Richard, Jonas, and then Maximilian. Name 2 reasons why you think DeFi has a future and 2 reasons why you think DeFi would fail, at least in its current proposition. Let's go.
Okay. Quite a specific number, 2 reasons. Well, I think obviously decentralized finance, we're all in this game. I think we all believe in it and believe it will be a success. Otherwise, we probably wouldn't be sitting in the room. But so finding reasons to fail is possibly slightly harder. But I will throw one thing in from an unbanked perspective, and something that worries me a little bit is the nature of loans that have taken place over the years in a currency outside of the native currency to people. So a lot of people talk about decentralized finance being something of a savior for the unbanked of the world, impossibly obtaining microloans, etc. But as long as what we don't see is that the repayments need to be made in the underlying asset. So if you make a microloan of Bitcoin and have to pay it back in Bitcoin, the volatility of the Bitcoin can actually destroy the poor person who's taken out the loan. And this we've seen with US dollar loans in many countries where a dollar loan has to be repaid in dollars, but the underlying fiat that they're trying to pay it back in their local currency is suffering from inflation, and as such they've been trapped by debt. So I think decentralized finance will face the same demons, so that's something to keep our eyes on. In terms of successes, I think the obvious reasons that probably everyone at the conference understands is you're putting back control into the hands of the people. So we're likely to, well, that can only possibly be a good thing, but we may see another reason that's going to cause problems is going to be regulatory environment, and the fact that many of the governments around the world are wary of anything outside of their central bank's control. So I've tried to make it as quick as I can. Hopefully those ones are good enough. Thank you.
So I'll pick up from where you left off there, and I think there are a lot of risks that are in the near term or the moderately near term that will cause DeFi to slow in its adoption. I think conceptually it's the right solution for our time and for how things are evolving. And so I think it's unlikely that DeFi will be completely stopped, but there are many centralized issues that we face today that add risk to its adoption in the near term. You named a couple of them. I would throw also in there the non-rational behavior of centralized actors today. The fact that central banks and large governments are able to make bets with their constituents' long-term financial stability with short-term offerings, and the populace goes along with it, is going to string out the need for DeFi to actually save the day. It's going to happen eventually, but when that is unknown. A lot of us are just completely shocked that the United States can issue, $3 trillion new worth of debt to compensate for this COVID issue. Most countries can't do that, obviously, but as long as the voting population goes along with it, it pushes out the date when the reckoning is going to happen, at least from my perspective. Now, the good news is that the DeFi is an inexorable force. The notion of the community coming together to manage its assets in a collaborative way is the longest story of humanity. It's what happened in the village, and as I said in my previous talk, it's what's going to happen in this future village that we're heading to.
Yeah, in Richard Jones, I can just agree with what you just said, right? I mean, there's not a ton could add now. I mean, certainly two big risks are, as you mentioned, the fact that you cannot really rely or trust or depend on what centralized institutions such as government central banks do. And parallel to this, what will happen to the regulatory landscapes in certain areas and industries as well that goes along with it. I think these are definitely two major risk factors that DeFi has to face. I mean, you all have to face to some extent, actually. However, I mean, I do see a lot of potential in a multitude of projects out there, and I think one of the biggest is that, there's a certain level of accessibility or tradability for certain, for users to get their hands on certain assets that they would otherwise not have a chance to, touch or invest in. And I think for this is something that DeFi really can make a big impact on if it stays alive.
Got it. Thank you. Let's go to the question. I'm not a big fan of DeFi, by the way, so I won't answer that one. Oh, this is my favorite, and I think you guys, I think you'll like it. So on the front page of The Economist, there's an article that's being featured, and it says the dangerous gap between real economy and a Wall Street economy. First of all, let's talk if there is a gap between the financial system and the real economy, and what are your thoughts on this, how we can address it.
Are we doing it in a random order, or is it back to me at the start? I'm happy to do it, but it leaves poor Max at the end with
No worries. No worries.
You're under the most pressure, Max, I think. Well, yeah, I mean, do we think that the Wall Street runs in a complete sort of a realm of its own? I think everybody probably does. We just heard there $3 trillion. And interestingly, the phrase, not everybody can do that. I think perhaps it remains to be seen whether the United States can do it as well. Everybody's dancing and the chairs are out, but is there going to be enough chairs for everyone to sit down? Or as someone famously said, you only know if someone's swimming naked when the tide goes out. We've printed a ton of money in Europe and in the United Kingdom. And so I'll extend Wall Street into the exchanges and the financial world globally, rather than it just being the United States. I think that it's impossible to print vast quantities of new cash without it having some form of effect. We've also spoken a moment ago about the fact that bizarre and arcane financial instruments are rolled out and the public accept them. So I think there is a massive disparity between reality and the real world. Sorry, the real world and Wall Street. However, another piece of advice that was given to me many years ago was the market can stay irrational longer than you can stay solvent. So I do think that just because it doesn't make any sense doesn't necessarily mean that it won't continue for a very long time.
That quote there was kind of what I was looking to say in my previous talk, right? The market can stay irrational longer than you can stay solvent. That's what's happening in the swimming pool of U.S. Debt finance, I think. I think this question, like the headline, is there a big gap between? I'm just trying to read what you said there. The dangerous gap between the real economy and the Wall Street economy, right? I think this feels like a very 20th century question to me, in the sense that, yes, obviously the financial services sector is a major part of the world economy. It is full of clever innovators who are figuring out how to get rich. And a lot of the ways that they're engineering to get rich are at the expense of traditional processes that have been in place over the centuries. They're financializing processes and sucking some of the rent that happened in Main Street, and they're sucking it into their bank accounts wherever they are around the world. So yes, that's happening, and it's at the detriment to mainstream society. But it's also an evolutionary thing that doesn't necessarily surprise me that we've gotten here with finance. And I think that the tech stack, the tech industrial complex, if you will, that's emerging since the 1960s, 1970s, that is full stream with the FANG companies and crypto as a derivative of that. That's another strange stack of capability and value that has been created, just like the finance stack has been created. That the tech stack is potentially at the, it has a big gap between the tech stack and the real world as well. And the tech stack is now sucking money out of the economy and putting money in its pocket at the expense of mom and pop Main Street potentially. And so also mom and pop mainstream have investments in the banking system now, and mom and pop mainstream have investments in the tech space, and they're using that technology, and they're using some of those financial services. And of course, I'm primarily speaking of first world countries, I guess. But I think it's all evolutionary. And I think that with the tech stack taking over, we have an opportunity to make things more fair for more people over time, if you will. And so I think the financialization of the world is a necessary product of how society has evolved, but I also think it's potentially temporarily focused on a small group of people, and hopefully it will change over time. And I hope that makes some sense.
Yeah, I mean, from my perspective, I have to agree. Of course, I definitely think that there's a gap between what's called the financial services industry and what's called the real economy, even though the financial industry is part of the economy, of course. You know, I think what is the current unemployment rate in the US? Like something 15 to 16% as of right now, and the S&P 500 recovered by nearly 50% of its losses again. So there is some sort of a discrepancy just in the numbers there already. And I think that, you know, maybe if this whole COVID situation worldwide has a good thing, a good side of it, you know, that it somehow highlights some of the discrepancies that we have, some of the issues that we have on a societal or economic level in various states and various governments, various areas of the world. Generally speaking, though, do I have an issue, for instance, if a government bails out a big bank, for instance, and has a mom and pop shop going down? Yes, on an ethical level, I have a huge issue with that. On the other hand, though, on the one hand, you have maybe 5 or 6 employees, and the other hand, you have maybe 100,000 employees that you have to think about, right? So in these situations, I really don't envy our elected leaders that we, well, at least in most parts of the world, freely elect and choose to make these tough decisions, to say, okay, we have to do this and this, because the right decisions are not always the nice and easy decisions to make, but the tough ones. So I see this little bit like from a split view sort of thing right now.
You're watching 2020 ANON, the panel with Richard Ells about the global financial crisis.
I think there's a kind of a segregation between the two of them, because money sort of, instead of being a means, it became a reason to, you know, to be in business instead of just enabling certain kind of relationships or interactions. It became like the higher goal. And we might see that now with the financial crisis everywhere in the world, we're seeing kind of a change that is happening, for example, in small communities where they start trading goods and forget about the currency. So the good becomes the currency itself. And I think that's an amazing thing for communities and for, you know, helping, like, have a healthy community and leave away the financial systems.
Can I just
so we'll have to see how that goes.
One point there for you.
Next question.
I just wanted to just mention something that you said about trading goods and how communities are, you know, you're seeing people trading goods, and how that, in my mind, brings us back to the village of the past centuries, right? When trading, and, you know, you were the producer and you were the consumer, and you traded with the people in your neighborhood. But what one area to look at for that nowadays, and this is going to be pretty geeky, is look at what's happening on with NFT tokens, and what's happening in some of these Ethereum-based virtual world sites that are springing up. There's this one called Crypto Voxels, which is kind of a virtual land place where you can build a little house and you can put your virtual artwork on display, right? And then there's like Sandbox and Decentraland. These are, you know, these are services that are starting to recreate the village in the digital world. And yeah, obviously it's just for people who are at the top of the pyramid who can access this and understand how to do it and stuff. But they're starting to do what you're talking about. They're starting to trade stuff. People are trading artworks. They're trading, you know, digital representations of things back and forth. And they're using the underlying blockchain technology to do so. But you don't have to have a central bank involved to do that, right? And the more society, the more the tech stack matures and the more crypto matures, the more we're going to see that kind of behavior coming back, I think. And it will start to fulfill some of the things you're thinking about in a tech way.
Yeah, I agree. And I'm very curious because we're, for example, with Tagin, we're using the teachings of Elinor Ostrom. the socio-ecological systems that she's proposing with self-organization methods and all of that, self-sustainability in communities. And actually, DAOs are one of the ways in which you can follow exactly her model, the model she proposes. So it's interesting to see that even in the real world, it's not just conceptual, but it's actual reality. In the real world, you can see this happening in smaller communities, villages, like you said, and then we can see that in crypto as well, which is, I think, amazing because we finally have a bridge, which we waited for many years. Is it okay if I go to the next question?
Yeah, do it.
Yeah, perfect. So the next question is regarded to trust. Today we have custodians for digital wallets, for digital assets. You can buy cryptos with credit cards. You can trade on an exchange, but somehow we're still dependent on the old system. And in old systems, trust equaled security most of the times. And if you look in our system with crypto, is but verify. So I want to talk a bit about where do you see trust in the crypto space, and like, is it trustless, trustful? Talk a bit about the nuances of trust in governance models and systems, USPs that we have, and so on.
Okay. Well, just quickly before I say that, which I would love to, I will just throw one more thing in about the barter. What we're seeing, we've got airtime top-up that you can buy with our cryptocurrency. And what's interesting about it is we've got people earning our cryptocurrency, but then they're ending up with basically they can't cash it out, they're unbanked. They can't go and get fiat for it, but what they can get is airtime. So we're seeing them trade that airtime with their family members so that they can get some fiat from friends, family, etc. So even crypto, people realize if there's something that's got some value, then they're going to barter it. Sorry to go back to the last question. So back to trust. If you don't own the keys, you don't own the crypto. You can only really 100% trust that you own the crypto if you made the keys yourself, you did it offline, that you're on an air-gapped computer, you're very familiar with encryption, and that probably is a fraction of a millionth of a percent of the population of the world. So where we end up is a position where you have to try and make a system as secure as possible that takes away the complexity of the private key system and the fact that people don't know how to store these things safely and they don't know how to necessarily create them or anything else. And then, of course, we end up with some tragedies sometimes when exchanges or custodial wallets of other kind get hacked. So there's a lot of education in there, I would suggest, to really bring people up to speed on these things. And I run a custodial wallet. We've got millions of users of a custodial wallet for our own cryptocurrency, Electroneum. And I try and say to people, which freaks their minds out, don't put all of your faith in our custodial system. But they're like, but it's yours. How can you say that? Because the answer is blockchain is there specifically for this problem. So if you can use a paper wallet or some other methodology of creating a set of keys yourself, and you can store the bulk of your wealth on that, then you know mathematically it's safe. So, but trust is a real issue. You know, if you have a physical piece of paper, you can lose it, the house can burn down, etc. So you've got other issues to face. So that's really probably the only bit I'd throw in now. I know that we're pressed for time. So in terms of trust, I think trust sounds like an easy thing to deal with, but even though people give us their trust, you can't necessarily trust that the system is invulnerable. Any system, mine included, all systems have vulnerabilities. So you need to believe in the maths underlying the systems itself.
So I'm curious to hear our Kraken expert talk about trust shortly here, but I'll just throw in one topic which relates to how I think about the world here, which is that the problem with what we experience today is that the user interfaces are really hard for most people, and the key management and all that kind of stuff makes it really difficult for most people to access this. And so I've been thinking that if you go back to where did trust make sense in the world, Go back to the village days when there was, 100 people in your village, and that village self-organized with its own trust system. And yeah, there was good and bad associated with that, but in general, that village acted as a cohesive unit, and the bartering happened and the trust happened across those community members. And I think that in some sense, that's what we're trying to build with these DAOs, right? We're trying to build a trust model amongst a finite group of people who are all in it together. They all put their financial assets in, they all make decisions together, and then they all either benefit or don't benefit from the decisions that they made. And so in some sense, that DAO itself can be a custodian of funds, and it can be more centralized amongst the DAO holders than just each person on their own. And so I think with Metacartel and the Lao DAO being venture DAOs that are trying to bring that to the fore, there's really an opportunity to have a middle ground for trust. It's not completely decentralized, but it also has a user experience that is accessible to more and more people.
Yeah, that's a key to balance trust. Yeah, I agree with
that. I mean, generating trust in general is always a gradual
with the user
process, and it can take a very, very long time to build trust, and it just needs one bad incident to lose all the trust in the end, of course, right? Especially in an industry that still has a somewhat of a shady reputation sometimes as ours, which we clearly have, and which we, with all the incidents that happens across the industry, we deserve to have it sometimes, if I think about it. So we at Kraken, for instance, for us it's very, very important because we are one of the fiat to crypto gateways, we are one of the largest exchanges, that we have a very high, or users have a very high level of trust, right? Because we deal a lot with a very large pool of financial institutions, big traders, but also, small retail customers that, trust us, that we know our stuff, that we are safe, that we are secure, that your assets are secure, that your funding goes well, etc., etc. So it is a gradual process, and the landscape that we currently have in the industry is not necessarily going to be a landscape that we have in 5, 10, or 20 years. Most definitely not. It will definitely change in one way or the other. I always like to use somewhat of analogy with the sharing economy to some extent. So what I mean is 15, 20, 25, 30 years ago, it was quite unthinkable that you rent out your apartment to basically some complete strangers over the weekend while you're out of town, or that you get into the car with some complete stranger that you just met on the internet, for instance, right? So actually, when I was little, my parents told me, hey, don't meet strangers on the internet and don't get into strangers' car. And today I use Uber almost every week, right? So it changes. People change, and people's view on things change, and people's risk appetite on certain things change also. So there's definitely the potential that, again, in 5, 10, 15, 20 years, the industry will be completely different with different players, different setups, different models, for sure. But right now, and for the short term, for sure, it's definitely very, very important that especially, and this is really something I can only speak about, in the crypto to fiat intersection, basically, that we have to generate trust with external parties. Because a lot of first-time traders come to us, a lot of first-time investors come to us, people that don't know about crypto that much, just want to get to know it a little bit and play around a little bit, they come to us. And for those people, it's especially important that they have someone who creates an atmosphere of trust and an atmosphere of reliability. And this is where we, for instance, we focus everything on, right? I mean, you can argue about our exchange design all you want, but our security, reliability, and stability is our #1 priority, and will always be so.
Right. So you're seeing more trust as an added value to services at an operational level. What about trusted protocols, for example, at a governance level, or like in the case of Bitcoin, we accept proof of work is making sure that the consensus is helping strengthen the security around Bitcoin, for example.
Yeah, and I mean, if I can speak about it again shortly, I mean, for us as Kraken, it's definitely also very important because we're all in the industry, or most of us are in the industry, because we believe in the value, we believe in the values of decentralization, we believe in the individual sovereignty in the end of protocols, but also people. But when it comes to these details, we speak about the reality with most of our clients, they don't really care that much about it. They want to have a safe environment. on where to trade and where to do their business. And they want to trust that the framework is correct. They want to trust that the fiat rates are correct, and they want to, make sure that nothing bad happens in one way or the other. That's what the biggest part of these are retail customers, and for sure of retail customers care about. But the underlying importance of government protocols, of consensus algorithms, etc., is something we also take very serious, because if you look at Kraken, we have a number of 33 digital assets listed currently, which is not a lot in comparison to some of our other players, right? And we make sure that before we list every new token, we do this 360 analysis of a potential asset, right? So we look at the financial structure, team, etc., etc., and of course the trustworthiness and the solidity of the governance models of certain tokens is, of course, an important aspect of this analysis. So we make sure that only reliable assets and trustworthy products are listed.
The protocols are written in code. You're not going to have a problem with that, but the governance, I've never trusted the governance.
Thank you.
I don't believe in how they're setting them up.
A little bit more on this
bad
topic
setups.
of trust and on the consensus trust and on the protocol level trust that you're talking about. I think this is an area that a lot of us have nerded out on for a while. Which kind of, what is the trust model of the underlying protocol, and which ones are, which ones really can you trust, and which ones do you just think you can trust? And having spent a lot of time in the proof of stake space, having spent a lot of time with Tezos, I feel really comfortable about the trust model that we have there. The governance model, the election model. I don't have that same level of comfort with a lot of other chains that are out in the market, even some really big ones, even Bitcoin, for example, where the big elephant in the room is around, miner, do the 51% attack, and do miners, are they truly decentralized to a point where that's that's a trustful model? And nobody seems to, in the rest of the world, people don't really care that much about that. They just want to hold the Bitcoin. They want to financialize it, as we're talking about. They want to hold the Ethereum. And so I feel like trust is more of an issue for a lot of us old timers in the space than it is for the new wave of enthusiasts who are coming to the market. And that's kind of sad, because it's very antithetical to the ethos of crypto, but it's also the natural evolution of adoption of this technology. The people who come to the market now are going to be a lot less concerned with trust and a lot more concerned with user experience. And so this is going to be one of the tricky gauntlets that we need to navigate through if we want trust to continue to be, the major element that we're basing our technology on.
Yeah, there we go. Most of the governances have been bought.
Let's go to the next
question. There's very little checks and balances on them.
This is sort of linked to the Economist piece that we talked about, but I think it's still relevant. So if financial systems are segregated from the real economy and stock market is facing a major crisis, so we're looking at an aftershock, fraud, and loss of marketing confidence. We're looking at political backlash. Do we expect to see an impact upon Bitcoin and altcoins? Yes, no, why?
Okay, obviously I think we should probably all preempt this, that if we're going to be talking about coin prices, we should give the classic, this is no investment advice, but I'm sure that goes for everybody in the room, the virtual room. Yeah, I think initially when we first saw the impact of what this pandemic is doing to the United States, or the large, heavy initial toll, we saw the Wall Street style markets react very strongly and very negatively, and there was an interesting correlation at that time between between crypto altcoins, or very much often, or very often, sorry, follow Bitcoin anyway. But we saw this Bitcoin follow the markets down, which I was quite surprised at, I have to say. I genuinely thought there was going to be a complete disconnect. I think that disconnect perhaps is something that's going to take a little bit more time to happen than perhaps I thought it would do. When we saw the markets come back, we saw Bitcoin come back. It probably tells you that the very same people that are in the markets in the United States and globally within the equities markets are probably the same people that are the large drivers of price movements within Bitcoin. So a flee to cash is a flee to cash from all sectors. I mean, we saw the precious metal markets move as well, which again you would think would be a flight to safety play, and yet they moved down in parallel with everything else. So I think that there's still a massive correlation in markets, probably, in my opinion, just because they're almost certainly all owned en masse by the same sort of people. So that's my opinion of it. Anyway, be interested to hear what other people think.
There you go.
Yeah, I don't. I agree with what Richard said, and I think the one evidence of this correlation is the flight to stablecoin as well, right? The Tether and the decentralized, both the centralized and decentralized stablecoins have been growing dramatically in this crisis, and so people want to hold dollars, and they'll be happy to hold crypto dollars as well, which is really interesting, and which kind of ties to this whole discussion about the central bank digital currencies that may or may not emerge, and whether or not, how long is this risk of remolding the centralized finance space on crypto going to continue? And if we have centralized coins, is that still going to permeate all these same risks that you're talking about here? And I think the answer is yes, probably.
Yeah, I think we saw in the previous weeks that if you have such a global Uber crisis, if you want to call it this, right, for lack of a better word, it affects everything, like literally everyone. We saw that there's a correlation, or there was a clear correlation between the Bitcoin crypto prices and traditional financial markets. We saw also that, of course, Bitcoin recovered to a large extent, but we can still see that it's a bit lower than before. To be quite blank, if we have such a global crisis, if so many people are losing their jobs, so many people's jobs are at risk. I mean, if you're struggling to pay the rent, if you're struggling to put food on your table for your kids, you ain't gonna invest into Bitcoin or shares or bonds or anything, right? You set clearly different, and hopefully you set other priorities in your life. This is one thing. And the other thing, I think also I'm afraid it might have an impact on the funding for certain, let's say, crypto startups and promising projects that are out there. And I'm afraid that given the uncertainty that we are in, given the market conditions and the real risk of a second wave, potentially even a bigger or worse wave, that some investors might potentially overthink the investment strategies, and might decide to not push their money into certain projects in the industry, which would be a shame, because we need new innovators, we need new players, we need new products. But I'm afraid this is a risk that we also face.
All right. You're watching the panel with Richard Ells.
I mean, we're already seeing
the global financial crisis.
We're already seeing VCs that are sort of postponing any kind of investments until September, October 2020. And they've said that since February, it's everything locked down. So we'll have to see how they react. But hopefully they still have open arms for some of us. It would be good for the space, I think. Let's move to another question. I'm going to mix this so we get...
But this way you guys know, CBDCs are definitely coming. The U.S. will not let
taking
China
a step back and looking at our industry, what we wanted to solve, where we are today, why are we not there yet implementing in the financial industry, and what is missing?
I have no idea what she asked.
Max, I was going to say, do you want to go first for a while? I feel like I'm always taking the first field.
No worries. I'm happy to first. Thanks, appreciate it. Why are we not there yet? I mean, it depends always on your goal setting that you had, right? If you anticipated that by 2020, the whole world will be run on blockchain and will be the only thing in the world, I mean, then your goal setting were a little bit off, to be a little bit frank here. I mean, what we see is that, from our perspective, of course, only, that we have more and more users sign up, we have more and more retail users, and we have also more and more, of course, financial institutions, so clients, banks, trading houses, etc., that they on board with us and get into the space in one way or the other, either by trading directly for them or by creating some sort of retail product for their clients in the end. There are a multitude of different setups. So we see that number increase for sure, and increase significantly. So we are on the right track for that. However, again, and I mentioned it before, because we see it in our position as being at the intersection between the crypto and the called old school fiat traditional financial world, is that there's still some high level of prejudice and inexperience when it comes to crypto and the whole industry as itself. And we still have a lot of work to do there, and taking people somewhat by their hands and bringing them into this great space and teaching them about Bitcoin and the advantages of crypto in general, etc., etc. And I think this is still a process that will take a little longer. I'm not going to sit here and tell you it's going to take 5, 10, or 15 years, but it's a great process again. And the way I see it, I mean, listen, we're still in the early stages of this whole movement, this whole industry. I'm not going to sit here and tell you for sure that in 10 years we will be world dominators, but we are maybe half percent done, or even less. We're in the first steps here, and that's why so many people want to join this industry, right? Because it's such a young industry. There's so many crazy things still happening, and so many ways to change the landscape of the world de facto.
All right, Maximilian.
So, why are we not there yet? I would say, way back in 1991. Before many people who are listening to this were probably born. There was a Harvard professor who wrote a book called Crossing the Chasm. And Crossing the Chasm is a story about how to market high-tech products. And, his obvious point that he made now in retrospect to all of the marketing efforts that we've done since then is that there's a distribution of people who come to new technologies. Crypto is a new technology, right? And that distribution, it looks like a bell curve, essentially. And the early adopters, the people who come to the technology because they think it's cool, because they want to try new things, because they want to be known as innovators, the very tail end of the left side of that bell curve, those people are very different than everybody else. And the chasm that he talks about in Crossing the Chasm is the gap between how those people behave and how the rest of the world behaves. And in order for high-tech products to succeed, they have to cross that chasm. They have to figure out how to re-engineer what they've done fundamentally that change what attracted the early adopters to the early majority. And that's, I think, where we are in crypto. We're stuck in that chasm right now. I think everybody who's a part of crypto today, we're all still those early adopters. Even though we're not all techies and geeks and engineers, we're still all early adopters. And the early majority really has not begun to come to us yet. And we're all wrapped up in lots of things like key management and UIs and running nodes and mining and all that kind of stuff. And that's not the same marketing message that is going to attract the rest of the market
be
to
simple, easy
crypto. And
seamless.
So that's where we're stuck at. I think there are a number of companies that are trying to build user interfaces that attract the early majority, and if they can do it in a way that also provides still some fidelity to the ethos of crypto and the decentralization of it, that's going to be the magic solution that gets us to where we need to go.
Where it's seamless and you don't even recognize that you're using
I think what I'd add to
key.
that is that, because I'm one of those, and again, we probably all are, I'm one of those early geeks who loved the idea of it as soon as I saw it, got involved really early, was mining, and really happy on the command line. However, what I'll throw in there is that I actually do think that when you're in the global north, you've got a handful of ways to pay in your pocket already. You've got a Visa card, you've got Apple Pay, you've got a debit card, you've got all sorts of different ways. You've got PayPal, you've got any number of ways to pay. And we've already just said how much we think the fiat money in our pocket is being devalued. We just printed $3 trillion in the US, whatever. So which one would you rather pay with? You got some Bitcoin in your pocket, or you've got some fiat, really easily accessible with a single contact touch. You're going to use it. I think that we're going to see adoption come from places where they haven't got PayPal, they haven't got Bitcoin, they haven't got any easy access thing. Bitcoin could work as long as they've got the right wallet technology. So what we did in Electroneum, we came along, we made a wallet that's really easy for people, and we had distribution to make it easy for people that are unbanked, who don't have a Visa card, don't have Apple Pay. And whilst at the time when we were developing this, there was no easy Android wallet for them to make use of Bitcoin either. So we came along and said, you know what, there's a way to give access to cryptocurrency to people who have hitherto never touched it. And I totally agree that most projects their only actual users are crypto enthusiasts. And we definitely bucked that trend. We've got 120,000 mobile phone top-ups, averaging around $1, $1.50. These are not wealthy crypto enthusiasts. These are some of the poorest people in the world using our tech to actually top up their mobile phone. So we've had 270,000 app-to-app transfers in the developing world. So this is where a value is passed between two users with a QR code. So I think where crypto solves a problem, a genuine problem, and then brings a genuine benefit to those users, is where we're going to see true adoption take place. And I was exactly the same. You know, I've been playing around with Bitcoin for years and other cryptocurrencies, and the reality of it is I don't need it, I just like it. And as soon as you bring need in, and you can look at your neighbor, and your neighbor is improving their life, is making a difference because they're using a technology, and it's bringing wealth, as I said earlier, from the global north to the global south. Suddenly you're going to get involved. There's a massive benefit, and there is, and I'm not just talking about Electroneum, all cryptocurrencies have this power of global remittance of value at extremely low cost. That's one of the beauties of it. So I think true adoption, real everyday users isn't going to come from global north. I think it's going to come from the global south. So we'll wait and see if that is the case. But that's where I see the future of cryptocurrency in terms of taking off in people's pockets and genuinely being used as a replacement for what we've got in our pockets right now.
Wow, it's a good point there. VTN
so I have a question from the audience.
And is the closest thing I've seen.
I think it's interesting to take some questions from them as well. How would you define a stable coin, and what are good purpose stable coin? Should it have decentralized governance and not be pegged or backed to any asset? Who wants to go first?
Oh, I'm going to put my hand up just because if it's stable and it's not pegged or backed by any asset, stable against what? So Tether is stable against the US dollar. But it won't be stable against Bitcoin's value. It won't be stable against gold's value.
Stable, but
because it is pegged to the dollar. So I think we have to look at the question a little bit there and say I think stable coins have to by default pick their
there should be 100%
what it is that they're going to be compared against. Now that might well be a basket of things, but it would still need to be something that defines what it is. As soon as you get into that world, it is actually relatively difficult to maintain the value of something because everything has got these tremendous potentials to fluctuate, including fiat currencies themselves. So that's it. Very quick answer. Just wanted to throw it in.
Yeah, I think that if you look at Maker, for example, as a great example of somebody who's really innovating on decentralized stablecoins, right? The notion of using Ethereum as collateral to produce a US dollar equivalent coin is really awesome, but it's also really challenging. And the fact that the maker community has added other backing currencies, including centralized stable coins to help back their decentralized stable coin, points to the tremendous challenge that's here. I think what we're doing at StakerDAO is also going to be really interesting. You know, I mentioned in my previous talk that in some ways, because we've created a token that is backed by proof of stake tokens, some people can squint at that and say it's a stable coin to the proof of stake industry, but the proof of stake industry itself is very volatile, just like everything else. And until we get to the point where one Bitcoin is one Bitcoin and everybody wants Bitcoin, or one Tezos is one Tezos, we're going to have this huge disconnect between the volatility of crypto versus stability of people who are pegging things to the dollar. As we talked about in this conversation, pegging things to the dollar is not all that rational, but it's the best that society has so far today, and so it'll be interesting to see, you know, where this all goes.
I have nothing to add.
Yeah, they should be backed 100%.
Yeah,
if
I think
a coin
it's interesting.
is not backed 100%, it's a real
because we're
issue.
seeing one of the points of stability, the fact that people use a currency, you know, to trade, and that gives us stability. The more demand it is for that currency, the more stability it gets. For example, instead of having a backing in an asset, whether it's fiat or a basket of currencies, or you know, collateralized crypto, or let's say a precious metal. So that could be something in the future. I think maybe we'll get to see it at some point, to see a different kind of stability through, for example, maybe a DEX, a decentralized exchange, could make sense in stabilizing the value of a currency. This is just, I'm just throwing ideas out there just for the sake of conversation.
And I think also, you know, one of the areas that I've been really fascinated about looking into is the NFT space, and and in some ways, like, when you hold an NFT that has some value, you know, it's worth 1 ETH or 0.1 ETH or whatever the case is, it's actually being backed by something that's stable, sort of. Like, it's being backed by an artwork that some artist created, a digital artwork, right? And if the value of that artwork doesn't change very much over time, then the value of that NFT should be stable. You know, if the global opinion on artwork doesn't change that quickly, then the value of that NFT should be fairly stable. And it's backed by the craft of someone else's work. And in the NFT space, we're seeing a growing number of things that are being tokenized that are backing the value of those NFTs. I know we were talking at the dinner last night about there was a speaker virtual dinner last night for those who don't know, and it was a fun place to learn about what other speakers are talking about. And one of the conversations was about how some famous winery is tokenizing their wine, and you can actually buy you can hold an NFT token that represents a certain amount of wine that they're going to produce in the future. And you know,
my headache suggests I must hold a lot of those tokens.
Very good, yeah. And so I think that, you know, obviously a bottle of wine today, you know, let's call it a $50 bottle of wine today, is not going to be worth $500 in the future. Right, but it might be worth $55 in the future. I don't know. We'll see how the wine turns out, what Robert Parker rates it. But at the end of the day, like, I think there are going to be some interesting and novel ways of creating stability in crypto with backings from other things besides fiat. And the NFT space feels like an area where a lot of innovation is going to happen.
Yeah, maybe. There's got to be an
What are your thoughts on
because I I'm sorry to keep that question going, but you did just make me think of one thing. There are things that are difficult to create. So you were talking about adding value or linking value to the fact that somebody's created a digital artwork. If you look at some industries, so for instance, there's whiskey investment is massive and gets tokenized quite a lot, which is what you reminded me of when you talk about wine. But whiskey is an extremely difficult thing to make. Unlike gin, for instance, anyone could set up and make gin, which is a very simple thing to make, very simple spirit, but whiskey isn't. So therefore, the stability in that is far, far greater. Yeah, I think it's a really interesting place to be, to find stable things outside of fear, outside of government-controlled things. But whether they'd stay outside of government control if you tokenize them and they became accepted as a payment mechanism is a seriously debatable point as well, I think.
I guess it could be. So what do I know? You're watching the global
panel. That is a very good point, because
it's got about 5 minutes.
I'm in between asking the questions you guys to ask each other, or just asking the question about financial monitoring and privacy. So I'm going to make a vote because you've seen the questions that you had for each other. Should we go for the funny questions, or should we go for the serious financial monitoring / need for privacy question? Who's for privacy?
Go for the funny ones.
Let's go for the funny ones.
For the funny questions? Let's go for the funny questions. So, Maximilian, you have 1 minute to answer this. How would you explain Bitcoin to someone like J.K. Rowling? This is asked by Jones, by the way.
Yeah, first of all, I unfortunately don't know the lady that much. I mean, she's a huge idol of mine, of course, but I don't really know what her reason was for going all into crypto now on Twitter, whether or not it's just genuine or if there's some, wanted to poke the bear a little bit. I don't know that, unfortunately. But in general saying, the people that are coming new to this industry or this new world and are interested in it, I always try to keep it very simple, very short and concise, while trying to focus on the, let's say, either, just from my personal experience, other people might have different experiences, but either focus on the, let's say, philosophical, ethical aspects and benefits of it, or simply the monetary and financial related aspects of it. Yeah, this is from my experience how people are most interested in it. If you try speaking about halving and other technical aspects of it, they will zoom out after 1 second. I mean, quite frankly, unfortunately, that's just the reality of it, right? So I would, try to focus on the philosophical aspects of it. That actually, the last 5 years, the price of one Bitcoin, for instance, it rose from 200. Was 2015 230, 240, something like this, to 10, almost 10K now again, right now in 5 years. I mean, this is an insane increase of value, right? I would focus on, that Bitcoin values and focuses on aspects like decentralization and individual sovereignty. And, these are the things that I would, in this case, focus on. But I would probably be the one asking all the questions to her about why Hufflepuff got such a bad reputation, but that's just me.
Got it. Okay, quick one for Jonas by Richard. People developing world with no digital payment options are the largest potential market for real-world crypto adoption. If someone is unbanked and unable to obtain crypto by sending digital fiat to an exchange, how do you suggest they start their journey and get their first crypto? 30 seconds to answer this.
Anytime.
I wish I had the Quidditch one now. That seems like a question that was obviously asked by an ETN person. There's anytask.com is our freelancer platform where people can earn cryptocurrency. That's kind of fundamental to the unbanked. They can't go and open an exchange account. They have to be able to earn it somehow. So more and more people should be doing this. I don't want this just to be us, but everybody should be paying out in crypto and accepting crypto. But freelancing is massive. The digital freelancer space is growing and growing and growing, and that's how they should be earning it, through freelancing and being paid out in digital, such as AnyTask. Sorry, I know we're...
Perfect. Last question is 1 minute.
1 minute.
Jonas.
60 seconds.
4.1 billion e-wallet global transactions and 2.1 billion consumers for e-wallets. What can we do to convert them to crypto?
I have no idea, and Richard cheated because I was supposed to answer that last question, I think, and he took my question. So
I won't answer yours now. I'm so sorry.
Yeah, no, that's no problem. I don't know. I want to add one more thing to Richard's answer to that last question because I don't know anything about e-wallets.
Okay, go for it.
Yeah, all I want to say is that I love the notion of giving workers an opportunity to earn crypto, and I think one other area that I would say people should go look at to earn crypto is look at the art space.
Proof of work.
Look at OpenSea. Like if assuming you have a laptop or a camera phone, you have some way to create images about where you live, about your culture. I think that kind of content could be put up on something like OpenSea, turned into an NFT, and could generate a small amount of Ethereum for people to get started. And as long as you have the base tech, you can start to earn crypto one way or another, I think.
Super.
It's a very good ending point.
Your e-money question, I'll just throw in super 10 seconds, super fast. There are literally millions of old wallets that are unused in the e-money space because why would people put money into them? They haven't got any reason. Unless they're being used for remittance, they just remain empty and dormant. If people can earn cryptocurrency and then cash out through e-money, then they're going to do it all day long. So the cryptocurrency coming into e-money is going to be what brings that alive. Sorry for
I gotta send that to Richard. It's real proof
Perfect.
of work.
We'll have to end here because Andres is afterwards. So thank you so much, and it was a pleasure to host this panel.
Thanks, everybody. Have a great day.
Thank you so much.
All right, so what we had is just a panel conversation about some topics, mostly in the financial crisis, and then obviously in governance and trust, and then obviously some hot questions for each of the panelists. I think the biggest thing I learned is that value of anything is an illusion. If somebody wants it, it all of a sudden has value. And so, if there was no food, then you know what? An apple would have a lot of value. So that's really what it comes down to. So value is an illusion based on who wants it. And the next thing that was very clear is anytask.com is a real proof of work ability to earn ETN coins. So ETN does do proof of work. Right on anytask.com. I'm going to coin that phrase. All right, guys. Thank you. I hope you enjoyed this show and this broadcast of the panel from the ANON2020 Summit. Looks like Richard's having a lot of fun. I'll try to get some other interviews and what have you as we go along. But I'll talk to you guys on the next show. See you then.